cryptocurrencies will still be a focus, given the focus of the incoming Trump administration. We know that you're bullish on many aspects of crypto, but I wonder if you might take us through where you see the best relative performance in that crypto landscape in 2025.
Investors, at our firm for the last 8.5 years, we have recommended an allocation to crypto, including Bitcoin or Bitcoin and Ethereum. That allocation probably should be much higher in 2025 because the regulatory landscape is actually becoming more friendly. So I think Bitcoin still has to be at the core of someone's holdings, and I see Bitcoin getting to around 250,000 next year. But that would allow Ethereum, which is around 3,500 now, to probably do even better. Ethereum could get to 5,000 or 6,000 next year, and I think this is also probably the year where there's what we call alt season, where there's things like Solana and other altcoins do extremely well.
Financial analyst and Bitcoin bull Tom Lee discusses his prediction for all Bitcoin and crypto investors, as well as a market update for the weeks ahead. Lee believes a massive amount of capital is about to pour into Bitcoin, and after the Bitcoin halving earlier this year, which Lee says marked the beginning of an absolute surge in price, we saw multiple all-time highs for Bitcoin. Bitcoin is currently sitting just above 94,400, down 1% in the past month. Lee believes Bitcoin is about to make history, as we witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially. This has caused a never-before-seen supply-demand imbalance for Bitcoin. And Tom Lee says, everything is about to change. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
You've been right on the direction of the market for a long time now. Tom, you think the gains continue?
Yes, I think that there's a lot more tailwinds building for markets in 2025 than have existed in 2024, mainly because, now we're not worrying about the Fed worrying about inflation and bringing a halt to the economy. We have an election that's behind us, and now we have a lot of cash on the sidelines, and I think companies finally having more courage and what I think we'd call animal spirits and a willingness to start to do mergers and other things that, like capital markets, that actually help stocks next year.
Bitcoin is a commodity, and that some of the companies that leverage those commodities could be in play as well, much like gold and gold miners. What types of companies are going to be the ones that benefit the most from that crypto expansion if it were to hypothetically happen?
2024 has given us insights. If we look at the best performing equities that are related to Bitcoin, what we would call leveraged stories to Bitcoin, meaning that they're either acquiring Bitcoin as a treasury asset or they're leveraged to the price, have done very well. And that would be things like MicroStrategy, Semler Scientific, and Coinbase. And there are other companies that are sort of doing what Michael Saylor would call the Bitcoin standard, like Mara. But I'd say in investors' portfolio, if they're especially a large cap focus, a company like MicroStrategy, gives you really good exposure to Bitcoin. The ISM's been below 50 for almost 3 years, meaning companies have been cautious. Their visibility hasn't been great, but finally the Fed is cutting, and we have an incoming administration that's seen as very business friendly. And so I think companies for the first time in a long time are going to be expansionary, feel confident doing mergers. I think this is a very good environment for small caps, mid caps, the financials, and cyclicals broadly like industrials. So I think it's going to feel a lot like the market broadens in 2025, even as tech sort of keeps up with the market. The big foil in 2025 is going to be whether or not there's a policy error, and there can be two sources. One would be if the incoming administration does implement tariffs that are damaging to the economy because we know that there'd be immediate effects, or if there are mass deportations that have some unknown impact on labor markets. The other source would be if the Fed becomes too inflation focused and allows the labor market to weaken. And so we actually slip from the Fed sort of trying to support the economy to the Fed trying to save it. I think that would be a very adverse development.
Embracing an unyielding enthusiasm for the Bitcoin realm, Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits as we head into 2025. Lee gives a market outlook for the weeks ahead and says massive gains will be made in the first quarter.
And we were just talking about this. Treasury yields at the highs of the year, dollar at the high of the year. Those two things have acted as headwinds for stocks in the past.
Yes, I mean, that's been a foil for markets to an extent. To me, I think yields, even at around 5%, still aren't really that damaging to markets because that means you're paying 20 times for a 10-year bond. And in some ways, I think, it's not clear why yields have been rising. It could be inflation. It could be the robust economy. It could be markets concerned about, the incoming administration's policies around tariffs, et cetera. So it is something I'm watching, but I don't think it's a foil even at 5%.
This is the place to be. The reality is the United States is the greatest economy in the world. The entire German DAX, their Dow Jones Industrial Average, you add up all the biggest companies in Germany, you total them all together, they are not as big as just Apple or Nvidia by itself. How much has Europe's woes, how much has that benefited the U.S. economy, benefited the U.S. stock market, if at all?
I mean, it's hard to link causality. I mean, for a long time, as you know, outside the U.S., most of the rest of the world is small and mid-cap stocks. I think 95% of all listed stocks outside the U.S. are small and mid-caps. And I think it's the U.S. has really seen companies make the bets in the right places. U.S. dominates technology, healthcare, and financials. Those have really been the strongest industries and the ones that benefit from technology, and the U.S. edge is enormous, right? I mean, outside the U.S., are there thousands or dozens of great technology companies? There really aren't. So I think in 2025, however, if industrials start to do better, then I think Europe and Asia start to outperform. But I think if it's a tech-led market, it's really going to be U.S. I mean, at some point, valuation becomes a liability when the market isn't able to be surprised or the market has overpaid for future growth. But to me, the last couple of years is really a story where investors have been underpaying for technology and the amount of innovation. I think 2025 is a year where we're going to find the AI and a lot of these applications actually do sort of re-architect the way America does business, and it's vastly cheaper, and that's why these companies are doing so well. But you're right, Brian. At some point, it's a bubble. I don't really think that that's the word yet, because I don't find that much ebullience in our clients. I think our clients are still pretty skeptical about valuations, which is why I think valuations aren't really a problem just yet. Small caps really are probably the best expression of when they believe the Fed is cutting for the right reasons, and there was a rug pull in December. I do think your viewers have to keep in mind small caps may not have hit escape velocity yet, but their underperformance for the last decade is 91 percentage points versus the S&P. It's the second worst 10-year underperformance since 1998. And then before
that's
that,
not necessarily bullish. I mean,
well, actually, it is very bullish,
right?
Sarah. It's super bullish.
Tom Lee challenges the conventional economic metrics and analysis, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lee asserts this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Lee highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Lee also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Tom Lee? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?